Hey everybody, welcome back. What a week. So we can see we closed right around that 50.19 level. We have a lot to go over here, a lot. We can see the breakdown here from CPI, and then when PPI came out, we really didn't move the same way, did we? We just kind of shrugged it off. What was really interesting to me was the resilience in small caps. And we're going to spend a lot of time on small caps because we're starting to see a little bit of rotation. Even though at the recording of Friday, you'll note that small caps was down the most, there's something going on here that's really kind of fascinating, and we're going to talk about it and dive into that. But before we start talking about what's going on here with the NASDAQ, because we're starting to see relative weakness in the NASDAQ. And if you see relative weakness in the NASDAQ, that usually means that the market in and of itself is going to go sideways to down. And we're going to talk about that a little bit, and also note just the most obvious, that for here, you couldn't even get over the top. But we're going to spend a lot of time looking at rate of change here as well. But just this little line right here, notice how you can't get above it. And here, what we'll do is let's just drop into this on the hourly very quickly, and you'll see what I mean. You can see your demarcation lines here very easily. You can see where you started to break down, right? It's really not that hard to see. And you can start seeing that these trends. Now, for me, this trend was just, as I like to say, absolutely glaring, and you're sitting right on it. What's fascinating to me about this trend, where do you see this? So here's Apple. Let's pop Apple out. Now watch. So you see that on the daily? When you start looking at Apple, and we're going to go look in the names at all these names in greater detail in a moment. But look at this. You're sitting on a major trend line from 2023. There's something going on here, and I don't know if it's going to develop or not. Maybe people are not going to buy that headset because they actually want to get a girlfriend someday. But I don't know. There's something going on here that we're going to have to really pay attention to. But if you look at how this is setting up, there's some things here that you really are going to have to pay attention to, right? And you see how these trajectories of these lines are dropping. We're going to have to watch that too. But we're going to get back to this. We're going to get back to tech and what's going on. But for now, I want to focus on a couple things. So if we get to the ES, the S&P 500, and we look at the most simplest of things, right? And what we like to do is we like to look at what happens the day of a big event. Now, the big event that we had is going to be the CPI event. And what we always do there, and if you take nothing from these videos, and you'll know this if you've been watching for some time, is you put a line where the algorithms act first on that 5-minute bar. And then you put another line where their low is, and you want to mark those off. And then you take another demarcation line and you drop in a 50%. Now this is going to tell you a couple things. Number one, it will tell you where you are since this event. You will note that usually they become battlegrounds, right? Because this is where institutions have said, I'm going to sell everything I possibly can here, or I'm going to buy everything I possibly can here. And when that changes, right, what happens? That means that they're dried up. So you see that becomes resistance, becomes what? Support. Okay. Same thing here. Becomes resistance until it becomes what? Support. Same thing, right? Wash, rinse, repeat. And you do this over and over again. So there's a couple of things that we can tell, snapshot looking at the S&P from the CPI data, and say, okay, a couple things. One, if you're above the 50% line, who's in charge? The buyers are currently in charge of the S&P since the CPI data, because you're over 50%. Makes sense if you think about it, because if you're not over 50%, then the sellers would still be in charge, right? Okay. And you see how you battled that. So whether or not this holds remains to be seen. If you do the same thing with the NASDAQ, and I'm going to clean off all my drawings for a second, and we're just going to pop this down, and you can already see the line. And you just mark that off, same way, 5-minute bar, and we're just going to take a look at what's going on here, and then we'll drop in the same demarcation line. And this is where it gets somewhat interesting to me, because you're seeing this, and this is what I mean by relative weakness. There's another way to show relative weakness, and I'll do that in a moment. But this just tells you where you're at. This doesn't just show relative weakness, but this is a great way for you to determine where you are in the food chain. Meaning, do we have net buyers or do we have net sellers, right? So like when we go here, it's pretty obvious that the ES is stronger since CPI, and that you have net buyers. You're not going to get that from the relative scan that I'm going to show you in a moment. But you can say that you still have net buyers because you're over the 50% line. Here, you don't have net buyers anymore. Here, people made a decision and they said, that's enough. And they're getting out at that level again. See how it's fighting that level over and over again? It's just so neat to me how it's always that 50% line of that 5-minute bar, and how this acts. I just find it cool. Maybe I'm a little bit of a nerd, but there it is. I find it neat. You know, it is what it is, but I do find it fascinating. But a couple trades we have to get into as well. This SMCI trade, I want to go through the long and the short and how we played it. I definitely want to go through that and give an update on that because I think there's a couple learning lessons there. So let's just make sure that we have that nailed perfectly before we continue. Okay. Pardon my voice. So, and I appreciate the fact that I don't have to worry about editing these anymore. It makes my life easier. This one is packed and there's some real significant changes in it. So you're going to want to share this one. So I would really appreciate if you share this. Sometimes the algorithm, because I don't run ads in the middle of this, does not show these videos as much. So you sharing them and commenting, it does help me a lot and get this message out there. And this is going to be a really important week coming up, even though it's a short week. So you see your levels right in here? Okay, you can see how that's setting up, right? Okay, so what are we above? We're above the 50 and we're hanging out at the top. Okay, so that's the one way that you could determine where everybody is and what's going on. And which one was the weakest? Say it with me, NASDAQ. All right, the second way to do this, and we're going to do this, and then we're going to have to look at rate of change, is to go here and very simply make this a bear chart. And then we're going to drop this in as a line. And we're going to go to regular trading. And then what we're going to do is we're just going to add the Qs and then we're just going to add IWM. And everybody should have a chart set up like this. You should always have a chart set up like this, right? If you don't, set up a chart like this. And what we're going to see here, and we're just going to click off of this and we're going to remove all the draw links and let's drop it to a 1. And then what we can do from that date, and you can see the lines that are separating from when the market was closed and not. But let's just go back and take a look from the 14th on. And do you see any kind of movement going on there from the 14th? Well, I wonder what happened on the 14th, right? Okay, so we all know what happened. We all know what's going on. And we all can see that the Russell is clearly outperforming. So we know by this outperformance, what do we know? What do we know here versus what do we know here and here? Well, we know where they're putting their money. If we know where they're putting their money, do you think it's an idea that maybe we want to put our money in the same spot? I know we're all watching SMCI go up 100 points a day, or we were, and that dream's dead. And we're going to talk about how to tell that dream's dead. But what we're seeing here is this, and we have to talk about in the video's earnings as well. But what are we seeing? We're seeing diversification. Okay, so now we have that level of diversification, and we're seeing this trade. And this is actually a good thing because rotation's a good thing, but you want to graph set up like this. All right, so now we know how we want these set up. We can see the outperformance year over year, and you can just look at this over any time. You can just click through it. It's very, very helpful. Just like I have those sector charts that we set up, you want the same thing set up here. Now, with this setup, where do we go with this? Well, we're going to drop this back to candles. We're going to go to a base chart, and we're going to go to the ES. We're going to keep this on futures, and I'm going to get rid of my lines because this is something that we need to talk about. So there's something that you can use by yourself or with any, you can already have it set up, and it's called rate of change. Now, rate of change is a momentum indicator, and it's going to do exactly that. It's going to chart your momentum. I'm going to go here. I'm just going to show you what it is and how they have it. They have it as a 9. I make everything an open, high, low, close. And for style, to make it absolutely glaring, we're going to make it black and we're going to make it bigger. I don't want it that big because it loses some of the nuances, but now you know what I will be using. All right, so what we're going to do here is pretty much the obvious stuff, but this should be glaringly obvious to what's happened. See how we're going higher and what's the momentum doing? So let's just mark it. See how we're going higher? Now, this is not a sell signal. I have to get out, but you need to be aware of this. The momentum is slowing. Okay, the momentum is slowing. When we start breaking the 0 line here is when you need to pay attention to this. And it's getting worse. It's not getting better. Now go take a look at this on a weekly. And this is something that I would definitely pay attention to. We're going higher and higher. We now have a red bar up here, and this is going lower at the same time. And now this is one thing that I do like doing. Let me pull this down and show you. Again, rate of change determines the momentum. I want you to think about it. If rate of change is a calculation that shows the momentum, if the momentum starts decreasing, do you think that the underlying asset, in this case the S&P, is going to go higher or lower? It could still go higher, but it would do it at a lesser degree. So what we do is we tend to mark these peaks, and then we would look at those peaks and say, is this a level of interest, right? So what we would do is just drop a line from that peak and say, okay, how often are we here? Well, not very often. Again, all we're doing is looking for relative strength and looking for momentum. That's what we're trying to do here. We're not making a judgment. We're not saying that the market's going to crash. But what we would see is that it's not really that obvious that you're up here unless you're injecting 1.7 trillion in the market, right? And then you can see your little peak right here. And then what happened? You sold down. You didn't fall apart. The end of the world didn't happen, okay? You peaked here, And again, you didn't fall apart, the end of the world, you just kind of went sideways for a couple months. All right, what happened here? You can say it with me. We didn't fall apart. We just kind of went sideways from July down. Remember, this is what happened when Japan intervened. Same thing. Remember, they intervened with the yen. We talked about that in July. But you see where I'm going with this? It's one data point. But let's take that data point and let's throw it over into the NQ now. And let's get rid of this data. And what do we see here? Okay, we see the same thing over again, don't we? Let's drop this down. And what we're going to do is just put a demarcation line there and just see, is that something that we should pay attention to? Again, what we need to do with this, I'm just going to go back to here. We need to take this out for obvious reasons, okay? And you can see how this is playing and you can see how this is playing. And no, not obvious reasons because it doesn't fit my thesis. It doesn't fit anyone's thesis because they injected capital into the market and the Fed was buying stocks along with you. Right? That's why we know this. This is why NFTs, tweets were worth millions of dollars, right? Okay. So here's where we're at, and here's how this is playing out. It's one data point. Let's go take a look at RTY for a moment and take a look at this and go, okay, so what's happening here? Well, this is peaking and it's not doing the same thing. Well, what do you mean it's not doing the same thing? Well, what was NQ doing? Well, NQ, you're kind of up here and then you're kind of rolling, but this is going higher. What's happening here? We're going sideways and this peaked and it's down, but we're still going sideways with it. Okay, so this is a little different, right? And you should be able to see that, how this is consolidating over and over again. And then you come here and you look at this base and you say, okay, well, that's a pretty nice base you have there. And I think it is as well. So when we look at this base, it's definitely something that I have been paying attention to. And what we're starting to see is we're starting to see it start to build. Now, if we take this RTY for a second, we just look at the simplest of indicators. We get rid of the vol for a second, and then we just come here and look at RSI. That's interesting as well. Now, we're going to get into some other data here in a moment, but the important thing that you're supposed to take from this is that the rate of change, we're starting to see some levels of divergence. If you take a look at the NQ, and we go back here, and we go rate of change, and take a look, and we drop this on the weekly, and let's just make this. See, I don't like using close. You see that data? Watch that data change, okay? Why is it tighter? Because I'm taking the whole data set. I don't just want the close. I want all the data so I can make a more informed decision, right? Not everybody wants that. I do, right? It's just something that I want. So what we're going to do here again is we're going to make this darker. We're going to blow this up. And again, there's a lot going on in this video today. So I mapped this out so that you're prepped for next week. But I really want to hammer this point home because there's going to be something I think that people are going to not understand. They're not going to understand that if tech comes down, and we never know what's going to happen, right? None of us do. But if tech comes down, what are they going to say? They're going to say, oh, that's the end of it. It might not be because we're starting to see something, aren't we? Right? I'll go off on a divergence. Someone can explain to me why XLRE and KRE are not falling through the roof. I have a solution to this, even though they're cracking here. I'll tell you why I think, and I'll show you that. But let's go back to the NQ. What are we seeing here on the NQ? Okay. You're starting to roll, aren't you? So we need to be cognizant of this. We need to pay attention to it. It is not a reason to sell. But did anyone notice that this week that we just didn't get the same oomph in the charts that we recently had? This is telling you why that's happening. That's why this is important to understand. And I would suggest that you pay attention to that. In the same breath, take a look at this. This is the NASDAQ composite. Below the NASDAQ composite is the McClellan Summation Index. I'm not going to bore you with it again. We spent a lot of time on this. This is the zero line. Look at how you're opening up. Well, how can this be happening? Because what I'm discussing is momentum. I'm not discussing the fact that we're going to just roll over and collapse. I'm discussing a possible rotation via sectors and via indexes. That's what I see playing out. And we're starting to see signs of that, right? Some of the signs of this are that we're diversifying and more stocks are going up than we think are going up, right? There's this misnomer out there about what's going on with the Russell and that it's all SMCI. There's data that I'm going to present today that clearly shows that's not the case. See how this is widening up and it's staying on the zero line? That's because you're broadening out. It just doesn't feel like that because we're not watching all those names. We're very hyper-focused on some names here, but we are seeing a broadening out. Now, what's most important about that is where this broadening out is coming from. For me, that's what I tend to look at. Where is the broadening out coming from and why would you care? Here, take a look at this. Now, one of the things I like to do a lot is look for patterns. What we're seeing here is something that's probably not too obvious. So what we're going to do out to multiple years here so that you can see it. And obviously we're all aware of the correction that happened and what happened during that period of time. But what we can see is if we just take the base in and of itself, it would just look like a normal base. We wouldn't really see too much. But in here, we're just going to leave that 55 in for a second. And then what I find helpful sometimes is just to make it obvious. Let's get rid of the candlesticks and the pricing. And what you have is just the 55-day moving average that you're looking at here. That's all you're seeing right now is the the 55-day moving average. And what exactly are we seeing? We're seeing waves. And the waves that we're seeing, if we take a look at these waves, getting to the point where they're doing what? They're getting a little wider, aren't they? And as they're getting wider, what does that mean for us? And this is where you're at right now. What does that mean for us? Well, it's important. And the importance is that when you start to see things like this, it means that you're starting to get a change. And most people, I don't think most people get that, but when you start to widen out like this, you're going to start seeing a change in trend. And whenever you see massive volatility, you're going to see a change in trend. Just like we see with SMCI, where all of a sudden the stock's down 200 points or wherever it is from the day. We're going to cover that obviously. But when you see that, you just want to pay attention to it and go, okay, well, that's of interest. And then when you dive into the data, IWM is just SMCI. And really nothing could be further from the truth. I get it. I understand that people feel that way. But the percentage of stocks that are up, that are in the IWM, is significantly greater than people are giving it credit. And it's actually at a historical level. Now in front of you is the Russell 2000, and it is percentage of Russell 2000 stocks registering a 63-day high. And this is important because it really flies in the face of kind of the nonsense that you're seeing online, either whether it's Twitter or YouTube, that the entire move just happens to be one name. So if we take the top of here, and the way that this is going to be calculated going forward is really just from this level right around here. I'm going to show you some data. The data is from Sentiment Trader, who I do like their analysis very much, just because it's just so objective and it's just like this. These are the facts, do what you want with it. And you can see that once you get above that 37, 38, or we're just going to say between 35 and 40, it's not too common, is it, to be in this area, right? It's really not too common for anybody to just be up in here. We're just going to draw lines. Oops, we're just going to draw lines in here just to see how, that level, and just ignore that. So this is pretty interesting, right? And you can just see in here, all through here, that the chances of even being in here, if we colored this in, they're pretty slim. And what is this telling us? Well, maybe you're up in here since 91, 90. Maybe you've been up in here, 10 times, maybe? Okay. So if we realize that we've only been up past that level that I just drew about 10 times roughly, well, that's telling us how rare it is to be up here. Then you just take where we are right now and you drop this across. And then you go, okay, well, that's really rare for us to be up in this range. And then you would just kind of mark that level and say, okay, well, that's really around the 12th. And where's that put the Russell? Well, that would put it right here. All right, let's just leave that mark on. And then we're going to go here and go, well, that would be 90, 91 right there on the Russell. So we have the end of 11, 12 right here, and we have 90, 91. And this is going to be important for us later because really this is the third highest close on this that we've ever had. As a matter of fact, if you really go to it, this is the only one that's ever been higher. So what is this telling us? And I'm answering this because of your comments. I read all the comments. I respond to every single comment. Please keep commenting because that's why I'm creating the content. Because when I will say things like, oh, the Russell's looking to me like it's very attractive at these levels, people will say, well, based upon blah, blah, blah. This is one of the things that I like to do. I like to look at analysis like this, especially when you see something that over 30 years or a body of work is affecting us, right? And this obviously is affecting us. So if we take this into account and we look at this, we could see that this is certainly something that we should be paying attention to. Certainly when you're getting up in the 40% to 50% range and it's something you haven't had in 30 years, the percentage of Russell stocks registering a 63-day high, certainly this flies in the face that this entire move happens to be SMCI, right? I mean, a matter of fact, the day of recording this, SMCI was down about 20%. And when I was recording this, the IWM was down 40 basis points. So kind of put that together and try to wrap your head around that if that was an accurate statement. So now we have the body of work. And if we look at the level that we drew, right around that level, what we're looking for is, okay, once we get over here, what does the data suggest? Sentiment Trader, get my arrow back, goes through the dots, and they're using 38% as their cutoff. What they're doing is they're saying, okay, every time that this happens, that we are above a 63-day high on the Russell 2000, when they all get to that level, 38% register a 63-day high, what happens? And how do we do? Well, the first thing to take into account is you don't have 30 data points. So next, 12 months later, what happens here? And this is pretty impressive. I mean, there's really no other way to say it. So first off, you'll note, I understand it's not 30 data points, but what you're seeing here is you have massive returns here, like returns that we usually do not see. And I think that's really important for us to just highlight that if you really go through here, the lowest that we're really seeing is an 8% return. And historically, if you look at these returns, they're all well oversized when something like this happens, right? I mean, you have some here that are 50, 54, 42, 37. I mean, they're big numbers. They're really big numbers. All right, so that's the first thing to take into account. The second thing to take into account is none of them are negative. Now, this is where it gets neat. So they take the Russell 2000 relative comparison to the S&P. And what do they find? Well, what they're doing here, just so you understand this, they're going to take IWM, and then they're going to take IWM, and then they're going to just very simply divide it, right? So they would just take the Russell from here, okay, and then they're going to divide that by the S&P, and they're going to get this relative chart. And I'll show you how to do that yourself for free. I'll show you in a second how you could do this yourself, and you can actually chart it to see when it's starting to happen. And I do these kinds of relative charts all the time, and it actually gets me in front of turns. But it's very simple to do. You can do it for free on TradingView, and I'll show you how to do it. This is what we have, and this is what we're dealing with. But what is it telling us? Well, 12 months later, this is showing you the relative outperformance of the Russell over the S&P. It's pretty staggering when we start to look at it. You have 70% chance when this happens of being an outperformer over the S&P. 70%. And again, you go through that data, and really, what is it telling us? It's telling us that you could have a 32%, which is just crazy when you think about it. 32%, 27%, 20%, and that's over the S&P. There's a 70% chance that you'll be over. The median is 530 basis points, or 5.3% chance of that of what you're going to get relative to the S&P. So I thought this was really powerful stuff, and it definitely falls into the fact of this may be why we're starting to see that change in volatility here. And we are seeing a broadening out, even though we don't believe that we are. We are seeing a massive broadening out in the amount of units that are outperforming. Now, before we get into the relative side of this, if you take a look at TNA, and we just come all the way back here, we go to 22, 21, until you get to the pandemic, you're starting to get to that level in TNA, which is the 3X bull fund. You're starting to get up here again to that level of volume. Nobody's talking about that. We're not really hearing a lot about that. And if we take a look in here and zoom in on this, you can start seeing it. It's like an off-ramp, even though it's not going anywhere. Sure, you could say, oh, well, it came back from October. Well, everything did. But look how the volume's increasing in here. And it's very quiet. We're not seeing much of it. Now, in order to do this equation for yourself, you just take IWM and you divide it by the SPY. And then what I tend to do with these, and we're going to take out the volume for a second, you take out the moving averages, and I do them in line form because I find them extremely helpful to do in line form. And you can go here and you can hit a weekly and see this on a weekly chart. Now, if you see this on a weekly chart, you'll notice something that's happening down here that I think, again, is pretty important. You can only go back to 2000. But one of the things that I think that you're starting to see here is you're starting to form certain kind of bottom down here where you're hitting a level and now you're unable and this is relative, on a relative basis to actually break here. Now, if we start overlaying indicators here, we can see just overlaying a very simple MACD. You can see the cross, even though you're below the zero line, you're crossing and you're starting to lift up. This is, again, something that we should be paying attention to, because when you have these crosses and you start to lift up, you're starting to see some level of outperformance. And again, I think that's really important because you kind of go back and take a look and go, well, you didn't really see that there, but you did finally get there and start popping over just as the role played. And it played here an important part as well. So is it the be-all, end-all? No. Is it something else that we should look at? Yes. Just like when we're trying to see, is the Russell going to outperform the S&P? You might want to look at a couple more things. So, for example, I might want to look at RSI. Now, what is that really telling me? Well, it's telling me a couple things. You're basically in line on the divergence, so it's not really giving me too much. But one of the things I do, especially when I'm doing my weekly scans, I have weekly scans, monthly scans. What I tend to do is I tend to look at these and then go, okay, let's look at a bunch of different indicators so I can get a sense of, is this picking up speed? Is it not picking up speed? Is there a correlation? What are we seeing? Because we have the data, right? So the data that we're looking at, whether that's macro, right, which tells us who, or fundamentals, which tells us what, or technicals, which tells us when. Technicals is really what we want to look at once we know the who, what, when, right? We know this from the stool, the three legs, who, what, when. Macro, fundamental, technical. Okay. So now what are we seeing here? Well, this is rate of change, and you're probably already seeing it. Now, rate of change is exactly that, and you can look this up for yourself because I'm not going to spend a lot of time on this because we're going to cover a lot of ground today, and we're going to get really specific, and we're just going to deal with facts today more than anything. I'm sure everybody already sees this divergence on the rate of change. So as we dropped here, and let me change the coloring on this because we've been going dark mode in the pre-market. I might go dark mode across the board on all of the charting systems. I haven't decided yet. But so we have that divergence, right? And that is a positive divergence that we're saying. Now, rate of change. Rate of change is what's telling you Is this going to pick up speed or is it going to lessen speed? That's why it's so important when we look at the NASDAQ or the S&P and the Russell and you use rate of change, which I run every week. When you get negative, you want to just stay out of the way. In other words, when these flip to negative, you will see the biggest drop in the indexes or in anything relative. And when you flip over, you tend to see one of the larger moves. Now, what's happening here is we have this positive divergence that's happening here. And at the same time, I'm sure that you already see the flip, and you can see that flip right there. I've got to change this to go from there. And I appreciate that we're just rocking and rolling here, and I don't have to worry about editing these out. It lets me get so much more stuff done and lets me do really what I want to do, which is just do the research. So you see where you're at right here? So we've already flipped here. So this is already telling you that this relative is most likely going to continue, that IWM is going to outperform the SPY. We already have the data that suggests that 70% of the time that this has happened, that we've done that. And then on top of this, right, we know that this is the third largest time. We know the other time when we looked at that data was when? If you remember, it was 90-91, right around there when we collapsed. And then it was also end of 11, beginning of 12. So if we go here and we take a look at that and go, okay, well, this is fairly interesting times to say the least, but you can see here rate of change. So not only is this setting up to outperform, meaning the IWM, but the level of outperformance that it's setting up for is setting up to actually increase. I would not sleep on this. Let's spend a little more time when you take a look at the comparative from what happened previously. Now let's take a look at what happened in 90-91 when this took place. So if we take that December area and we just go out to next December, you're looking at 37.6%. And remember, these were only the only two times that were this high on a percentage basis. So here we're just going to take this pop from October 2011, and we're just going to come over, and that's going to get us a 16% return. Now, clearly, anything can happen, as we all know, but when you start looking at all the data, the amount of volume that you're starting to see come in here, it does start to look like we're going to start seeing some level of outperformance in the Russell. Even to the point, if you look at the way the market acted on Friday, we saw something more significant than anything else. We saw the action at the end of the day where even as the NASDAQ and ES got worse, once the Russell was down, that was pretty much it. It pretty much stopped. But let me know what you think of this. Comment below. But I do think we're getting to the point where small caps are getting ready to participate a little bit more than anticipated. So now we have a sense of where the money's going. Now that we have a sense of where the money's going, we can start drilling into it just a little bit more and start looking for sectors. So what I like to do, and I'm not going to do the big one, but there are three major sectors that I have as far as just charts. This one has 20 in it. There's a dupe right here. I see it. And the reason I'm using this one versus the other one is because I'm looking for more of a major trend than more of the minor trends that the other ones do that have like 40 or more in them. And I plan on coming out with something so that they can be monitored on a daily basis. I'm working on it, and I'll just post it for free. But you can screenshot this, and there's a couple dupes in here, I think. I think there's at least one that I noticed, the XLU. There might be another, but I don't see it. I might have taken it out. Anyway, purpose of me showing you this is if we just go back 5 years on a weekly, you can see what's taken off. Well, what does this have to do with what we just looked at? And this is where it gets kind of interesting. So what you do is you look for inflection points. Well, okay, well, what's an inflection point? An inflection point is where an event happened. And so you say, well, what was the biggest event that happened probably in the past, let's say 6 months to 3 months, right? I would say that it was the change in interest rates. The change in interest rates where Powell came out and said, we're not raising anymore. That would be the biggest change that has happened macro that we have seen. And remember how we look at the world. And when I say we, I mean me, and you can obviously do whatever you like, but macro, fundamental, and technical. These are the legs of our stool. This is how the world revolves, whether we're shifting and leaning on one leg versus another, just the way that I view it. And then I just tried to break it down more recently so people could find it even more actionable and just say who, what, and when. Okay? Who, what, when. All right. Got it? Good. So this would be the biggest event that happened, not NVIDIA's numbers, not SMCI going to the moon, not ARM going to the moon, not what's going on, geopolitically, even though that does have ripple effects. But the greatest event that happened to the stock market was Powell saying we're not raising rates anymore. And from some reason, from that date on, we flipped to not raising rates to we're going to get 7 cuts. Okay, somewhere along the lines, we jumped the shark and we went from, things are going to start slowing down. He's not going to raise rates anymore to, well, we're obviously going to get 7 cuts next year. How we got there, I don't know, but we did. And we all kind of bought along the lines. So now we've gone from a weekly to a daily and we're drilling into this, right? So then what we do is we just kind of come back here and we're just going to mark that time and go, okay, well, who's really been ripping since then? And you start drilling into it. Well, isn't that interesting, right? Because you would certainly assume, and let's just make sure that we got this all the way over, okay? Because you would assume it's the SOX, right? I mean, anybody would assume that it's the SOX that's lifting. And what we're seeing here is that it's not the SOX, it's biotech. Now, I find that pretty fascinating because there's obviously been a battle going on here. But then what we start doing is you just start dropping it into different time frames, and then you start looking and saying, okay, how is money flowing? So since that day, how is money flowing? Well, we can start to see that it's flowing fairly well. And here are the Qs. And we want to see where we are above the Qs. And what we should probably do, that's why XL used in here twice, because this should be SPY in here. And as always, comment on these videos and please share this one. There's a lot in here and there is a lot going on this week. So if you go to 24 and then you take a snapshot, you can see, well, the SOX is here now, and you can see how that's definitely affecting us, right? And then you just start going through the list and you can just start seeing how they're all starting to move. And that's definitely something that you want to pay attention to, right? You definitely want to see how it's going. All right, the SOX is here, XBI is here. Is that coming back or is that falling out of favor? Now, this is where it gets, to me, it gets really interesting because now you can drill into like an hourly and just go, okay, just give me February for a second and then go, great, this is what's going on in February. And then you just take a look and you go, okay, well, here's the top 3. All right, well, that's kind of interesting because now I've got 1, 2, 3, 4, 5, 6, 7. 7 sectors. I know they're not all in the S&P, but I have 7 sectors above the S&P, and I have 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 9 above the NASDAQ. Now, there's 2 things that are going on here. Number one, the NASDAQ should always be higher than the S&P. In general, it just should. If it's not, it means you're going through most likely a change in trend. You might want to remember that. All right, so now you have this. Now, this is where it gets, to me, pretty interesting because you could just take the top 3 and go 1, 2, 3, and you could actually go over here and then just start clicking off the others, right? And blocking them. And you don't really have to, you don't have to do it this way, but what I find is sometimes when you just go through and say, I just want to focus on those top 3 or 4 and see what they're doing, by clicking off the others, you just get a clearer picture. So I tend to do this every once in a while, and it just makes my life a little easier in viewing the world. Let's get rid of commodities for a second. We'll leave the INDU in here as well. And let's get rid of the XLRE, even though I am really surprised to be able to find. Let me just see if I can find that real quick. If not, we're just going to move on with our lives and leave it in there for now. We're going to move on with our lives. So here's the SOX, here's XBI, and here is XLI, and here's the SPY, and here's the Qs. And you're noticing a trend where they're all starting to trend down, right? Okay, now in here, we're just going to pop IWM. So in here, we overlaid IWM. So here's the SOX, XBI, IWM, XLI. And of course, you can start seeing that they're all coming down, but are you seeing a different trend from February on? You are, because if someone said to you that, by the way, yeah, the SOX, of course, is going to be higher because everything's on fire, XBI's here, but would you have thought that the Russell is where it is? Most people would not think that. So then you go, okay, well, what is above or beyond where the Russell is? Because the Russell, if someone said to you the Russell is actually leading right now, it doesn't feel that way, does it? Right? That's why this stuff's so important, because when you actually look at it on paper versus, quote, your feelings, because no one cares how you feel, right? All that matters is the results. If you start looking at this, you can actually pick this out and go, you know what? This is actually doing a heck of a lot better than I thought it was. And this is something that I need to pay attention to. And this lets you know how to look into the sectors. And then you take this and then you overlay what's happening here, and you start looking into the smaller sectors. Here, take a look at this. So it's no secret that the SOX absolutely is exploding. AMAC crushed. NVIDIA's next week. We must talk about this. But what am I getting at here? This just looks perfect, doesn't it? Let's get rid of my notes. If you don't get the newsletter, it's free. There's a free version of it that comes out daily. Make sure that you get them. I mean, there's a ton of information in there and they are free. Nothing with it or no cost associated with it whatsoever. All right. So does that look like something that's getting ready to stop? Forget that we're super high and things can't possibly go higher and this is going to happen and that's going to happen and what you're reading on Twitter. Let's just say that this wasn't semiconductors. Let's say that we're looking at something called Bob and you just look at the chart of Bob. And you don't know if this is a week, a month, or a day. Is that going higher? Well, the first thing that you would do just by basic technical analysis is go, well, this is a cup that's in here, right? Because you can see that cup pretty clearly in here. And then you can see that handle in here, right? Okay. And then you can see the breakout from the handle up here, right? All right, so you can see that, right? So there's no way that you would look at that chart, forget about volume, everything. All you have is price. Would you look at that and think it's going down? Now, of course, you can always come down to here and pull back a good 10%. That's possible. But over the course of time, would you look at this right now and think it's going down? If you have the most basic of technical analysis skills, there's no way that you would think that. And then you go and look at XBI. And you go, okay, well, I don't think that that's going to pull back, but that's having some issues here, isn't it? But we keep hitting this level over and over again. And then you kind of look at where your bottom line is, and you kind of look at how you're wedged in here. And okay, maybe we could make the argument that that's going to be through here. But if we lay some of the more basic indicators out there and just drop this down to a weekly, get rid of this, and we start seeing how some of these are setting up in the trajectory of something like the 12-week. Remember, I used a 12, a 22, and a 55. Would you think that that has the possibility of maybe breaking out here? I mean, we did just close at an all-time, multi-year high on the weekly chart that you're about, I don't think you've been here for about 2 years, right? So you would look at this and say, well, there's a 2-year base here. Yeah, we have a chance. I could see that possibly breaking out based upon the trajectory of these moving averages. Okay, we're getting there, guys. But this is important for you to note this. And then you look at XLI, and we're just going to go to a bear chart here, or meaning bear, just completely bare, like nothing on it but price. I'm going to drill this in already for time's sake. And then you would look at this and go, okay, well, that's kind of interesting because the dollar's been going higher, hasn't it? So these names are supposed to be dropping when the dollar goes higher, but it's not. Instead, we're doing this. And what is this? Well, this would be a higher low. Okay, and so you get a higher low, and then you're bonk, bonk, bonk. Tries to break, can't break. We call this a test. Tries to pull back, can't. And this is with XLI. And what's happening in XLI? I mean, Boeing's blowing up, right? I mean, not literally, but like you have major problems there. Okay, and this whole sector is still going higher. All right, so we're seeing that happen. Then you take this, and then you start going, all right, well, wait a minute. If this is happening in the large cap space, maybe we should take a look at this and start saying, okay, well, let's start looking, and you can see Invesco has all these small cap ETFs, and I look at these for sector weighting. And you can start going through them and go, okay, well, if the Russell is the sector, and then you start going, all right, so then you start going through energy names, small cap utilities, and there's a list of them. There's about 9 or 10 of them, I think. And you go small cap materials, and then you start drilling into it and go, well, that's industrials. Well, that's interesting. We know biotechs in general are pretty small cap anyway. So you look at the XBI and SOX, you already have that stuff already in there, right? You have some others in there like consumer discretionary, and you have some other sectors that you could go and take a look at, right? Like information tech that's in there. These are all Invesco small cap ETFs that you can go through. But where are we going with this? When you start drilling into this, you start going, well, what's the best looking one? Well, industrials. So where you would go, and where I'm going with this is, when I say to people say, well, how do you find your ideas? How do you do this? Okay, it's the same thing all the time. It is what? It is index. And then after index, it is what? It is sector, right? Then it becomes the sector. Then after sector, it becomes what? Then it becomes stock. So where am I going with this? Where I should be looking right now, based upon everything we just did today, is I should be looking at the Russell. I should be looking at industrial stocks in the Russell. So where you might want to go with all of this that just was presented, because people say, well, when you put all this out, where's it going? God forbid you have to think. Where it's all going is, you might want to go and take a look at the holdings in industrial in the Invesco small cap and see what the heck's breaking out. Now, there are 2 major topics I want to cover. Number one, I want to go through, because I've been showing like a P&L, and people seem to like that because they get to understand how I'm doing these trades and how it extrapolates out. So I am going to do that. I want to show a couple specific trades because I think will help you. And I think then you can overlay what we're doing there. And then I think that you can then do it for yourself. I think it's very important to get this concept. The second thing I think we need to talk about and get ahead of this, even though we have the time because we don't have till we have off on Monday, long weekend. I think we have to just talk about the elephant in the room. NVIDIA is coming out with earnings. After what we've seen with SMCI and what you've seen with AMAT and what you've seen with ARM, expectations for NVIDIA are, but the stock hasn't moved the same exact way as those names. And that's because it's an absolute monster. It's a juggernaut right now. So if you go back and you look at some of my tweets from, let's say, a year ago, I was saying that NVIDIA is going to be bigger than Apple. And a lot of people just scoffed and said, there's no way, blah, blah, blah. Just to put this in perspective, I need 1150 right now. Okay, 1150. And we need to talk about one other thing. We need to talk about what you need to see and what you should be looking for to see if the market's rolling over. We should talk about that. I'll talk about that at the end. We understand where this could get to, or where I think it could get to. I think that it's going to be a 4-digit stock if they don't split it, but I think they're going to split it. So then we have to go into this and go, okay, well, how do we know what to look for? Or where exactly do we stand with NVIDIA? And I'm going to show you some research here so that you can get this. We can all look at the chart. We can all do this and go, ooh, and ah, and now it's got red bars and this and that. It's all nonsense right now, right? Do you think anything in this chart is going to tell you what's going to happen tonight? I mean, or rather on Wednesday night. Okay, so again, we go back to the stool. Stool is life. Is there anything in that chart that's going to change the fact on what's going to happen on Wednesday? You have 2 days of trading left. You could go to 700, you could go to 900 before then. None of it matters. All that's going to matter is their earnings and what those earnings are. People say, well, if it's 900, it can't go higher. Oh, okay. If it's 700, clearly earnings are going to be bad. Okay. Let me know how that thought process works out for you, right? We all know how that story ends. It ends in tears. So this is what you have. And now you have if you have a trade on, which I already do, and we've had for some time, but this is it. And now you have to see what the numbers are and you have to make a decision. How much of this you're going to hold into the quarter is predicated upon your belief on the fundamentals and what's going on out there. All you have is the past and past companies that have come out with earnings to tell you what you're going to do here. So all you have really is looking at ARM, looking at AMAT, looking at ASML and saying, how did these companies do? People will say some of these companies aren't exactly tied to them. I'm just going to say it's nonsense. Okay. We're going to talk about SMCI, obviously, but understand that and understand that that's all you have. Okay. That's it. And there's no magical indicator that's going to tell you what's going to happen on Wednesday. All the indicators when you come in the next morning after earnings are going to be all completely different than they were the day before, up or down, right? We all know what's going to happen. It's going to be violent. A couple pieces of data that I want to present to you that I think will help you in making more informed decisions. These green arrows, this is a piece from Goldman. And for people that, when I show this stuff, say, oh, this is inside information. This is research. This is what's called research. This is what people should be doing, fundamental research. So when you're starting to see how it acts, these green little spots are earnings. What happens during earnings? Kind of tops out a little bit, doesn't it? So if we think about it this way, maybe NVIDIA comes out, maybe it's a blowout, but maybe it marks the peak. Okay? And that's somewhat what Goldman's alluding to here. They're alluding to a couple other things that I think are interesting. Now, the one thing we keep hearing about is NVIDIA is so high, it's too high. And it's actually an exhausting conversation to have with people because you're not understanding why it's high, right? You're looking at where it was a year ago. You're not understanding that earnings are literally doubling every single 6 months, right? And that's what you have to understand. I'm not saying to the person that's listening specifically, but when you're saying it's too high, you're not understanding why it is where it is. So let me kind of walk through this because they did an excellent job here of trying to explain this better than I did, right? Way more eloquent. NVIDIA is currently trading near low end of its historical range, NTM PE. Okay. So you take the NTMPE, okay, and you look at it and you would say, well, where are we? Well, because it's so much higher than where it was here, right? When we peaked, right? It's a completely different company. And if you don't understand that, I suggest that you start looking at that. So this is where the PE, NTM versus PE is right now. And let's just be really clear. So those that don't know what NTM is, because people are going to go, what's NTM? It's a really fancy investment banking and analyst way of saying next 12 months, okay? They just come up with a term so they sound cool. That's what it is, next 12 months. So the price earnings multiple for the next 12 months, meaning future PE, what are you trading at? This is where you were back then. This is where you are now. And that's predicated upon your base case. Your base case right now is 29.88. Okay, you're probably going to want to write that down. That is the base case for 25 right now. All right, I'm going to give you a couple numbers here that are going to help you on knowing after hours, is it good or is it bad? All right. So you're probably going to want to pay really close attention to this, okay? Because I don't think you're going to get this anywhere else, quite frankly. But I do think that you need to pay attention to this because I think it'll help you after hours in making a decision on what you're going to do. Long or short, sell or buy, whatever you want to do, if you want to do anything. NVIDIA is currently trading well below its historical premium relative to the median stock in our cover universe, meaning all the stocks that are in this universe. Where is NVIDIA trading in regards to it? Okay. Here's your 3-year median. Here's where NVIDIA is right now. Next 12-month PE versus the coverage of all their other names that are in that space. And people think the stock's too high. Okay, so in my opinion, this has massive potential. Depends on a couple of key factors. What are the key factors that you need to be aware of? The key factors that you need to be aware of, in my opinion, are just the easiest one to look at is what are 2025 estimates. So I will just give this to you this way and then you can do whatever. So right now, base case is this, 29.88. Just call it $30. That's your base case. Okay, if that's your base case, then earnings and estimates are going to stay the same. All right. Your next level that you're going to want to watch is, let's call it 31 to 32. Anywhere in there, and they're going to raise estimates. Okay. This is for 25. If they come at 31, 22, it's bullish. If they come in anywhere between 34, 36, it's going to go up substantially. All right. Because this is where they're predicting 27. Anything under 30 for 25, and you're going to get smoked. Okay. It's really that simple. So if you just want to just think about it from that perspective, and you can just literally use this as a cheat sheet that's in front of you right now, all right, so that you have it, that's the easiest way I can explain to you after hours, because people always say to me, how do you move so fast? I have a whole spreadsheet in front of me before this stuff even comes out, so I know exactly what to look for, when to look for it, and I act as soon as I say it. That's how I move so fast. One of the ways. All right, so you might want to screenshot this. You might want to pay attention to this. Now I want to walk you through a trade, but before I do, I'm getting a lot of positive responses for showing this. And I've never been a huge fan of showing this kind of stuff, but I'm starting to get why people want to say it. So let's go through the basics. That's where we're at in this one account year to date. As I like to state, this is one account that I'm trading. It is not all the accounts that I'm trading. This account is aggressive. And this particular account leans towards day trading and also options. All right. So what's important about this account is this right here. You see where I'm 875 every time I'm touching it, 180 every time I take a loss. My win rate is only 54%. Anyone that tells you that their win rate on consistently is higher than 60, 65%, probably run away screaming. Profit factor is over 2 to 1, which is really kind of cool. Trade expectancy is every time I touch the computer, I make $250 when I place a trade. These are things that you want to look at. That which gets measured gets results, period. I didn't say that. Tony Robbins did, but he's right. So you want to measure everything, okay? Your equity curve should always be trying to do this, okay? It doesn't mean that you're going to do this. It means that you're probably going to do this, and then you're going to do this, and then you're going to say, I'm not trading anymore, and then it's going to, right? And then eventually, but it looks like that, okay? That's what's supposed to happen. But that doesn't mean it's going to be like that, right? It's going to go up and down, okay? You got it. All right, you're going to be all over the place. All right, so what I want to show are a couple things here. Number one, this is January. We already went through Jan, and I'm going to show this stuff as much as you guys want me to. I really don't care. I can dump all the trades into a Dropbox and you can go and sort them, time and sales. Have at it. I really don't care. This is February. I'm showing this for two reasons. I showed this last week, and when I showed it, the reason I showed it was just to kind of say, hey, this is what's going on. This is where we're at. And I wanted to show a couple of the meta trades that we did and why we did them and then how you could do them. What's important about this are a couple things. Number one, yes, you take losses. People will take losses. Anyone that's telling you that they don't take losses, run away screaming. Okay? You will take losses. Why did I really take losses this day? Well, for me, it really boiled down to a couple things. Number one, I was shorting SMCI. Okay, so I'm telling you this for two reasons. One, I had a bias. Now, my bias is the trade was busted, and I'll explain why I think the trade was busted in a moment here and what we did about it. So my bias was the trade was completely busted. I will walk through that in a moment. I took losses, but this is my loss. I want to just be really clear about this. This is my loss when I'm shorting SMCI, all right? So that tells you how fast I was covering those. If you look at the gains versus the losses, that's how fast I was covering my shorts when I was wrong. Not playing games, I'm in, I'm out, I'm in, I'm out, that's it, right? There's no discussion, there's no nothing. At the end of the day, and this is what's really important, I realize around 974 on the stock, I'm wrong. I'm dead wrong. Okay, so what do? I reverse the position, okay? I leave the puts on, because why sell them? It's silly. They were worth pennies at that point. But if it's going to keep going, I can make money on the long side to pay for the puts and keep the puts, right? So that's what I did. So this again is one account, but let me just show you this so you can see. So when I show you this and you see this, people say you made money on the calls and the puts. Yeah. So here are the puts, okay? And I'll show you that trade. Again, this is one account. I do replicate trades of varying sizes throughout different accounts. But this account, I run predicated upon the community. Like what I'm doing in the community, just see how it's going. All right, here are the calls that I came in with. And then right off the open, boom, I sold them. I'm not going to show you the live trading because this video is already going to be too long. And then here are the puts. So you can see where we made the money. And then I have a decent sized position on Tesla in this account that's currently open because I saw something 2 days ago. So we put out an alert and we went from there. All right. Got it? Good. We all lose money. Anybody over 60, 65% should be probably working for Steve Cohen or is working for Steve Cohen. And yes, I lose money. And yes, I change my opinion. I change my opinion like the wind. Now we're going to cover this concept. And then after we cover this concept, there's a couple other things I really want to just wrap up with that are very important for you to know this week. But most important, if we take a look here, this is the news out of Bank America. And people will say, well, if you saw this news, super micro, Bank America initiates 1,040 target price. Okay, so day one, they come out and say, oh, it should be going here. So let's talk about this. Right. And let's talk about this in the sense of, all right, and so this is a concept that I keep talking to you guys about because this is what you have to understand. And I always say, do you have edge? Do you not have edge? Well, what does that mean? So Bank America comes out here and then says, by the way, we think it's going to 1,040. And then it goes to 1,000. And we talked about why 1070 was going to be an issue. We talked about this at nauseum. If you look at Thursday's video, we talked greatly about it. And you might want to go back and watch Thursday's video so you can understand why 1070 was a wall. We understood why 1070 was a wall. And that allowed us to act when it was up here and be aware of it. So, and you can go watch that Thursday's video. I'm not going to recap it. All right. So fast forward. we know that Bank of America is saying here to here, right? Bank of America is retail. Bank of America will then put that stuff out to who? Merrill. Merrill will call who? Retail. Retail will get involved if they're not already involved. So when you're trading, you have 3 levels of trading. All right. So let's just go through this really quickly so you get it. You have insiders, you have institutions, you have retail. You want to buy when the insiders are buying and institutions are buying. Okay. You do not want to buy when all of retail is buying. Why? Right. The reason for this is relatively simple. It boils back to when we talked about, where's your edge or where are expectations. So if the outcome is here, right, and you're understanding the issue here, then you are going to make more money than the person that's understanding it here, right? Strike first, strike fast, right? Okay, get it? All right. So then the people that understand here are going to make that amount of money. Now, if the expectations are here, then this person's going to make this, and this person's going to make that, right? But what if the expectations are actually here? Okay. And then these people get involved, right? And they get involved here. Well, they're going to lose money, and these people are still going to make money, right? Okay, get it? Institutions. Okay, you want to move when the insiders are moving. All right. Once that hits, it registers with me and it goes, okay, we're definitely in a position here where we're getting to the tail end of this thing because now banks are starting to panic that they don't even have coverage of it. Once you start to see that, that's why I was shorting into this. What we did, and I want to show you this so that you can see it, but what we did was we knew 1070 again was that level, and you can see it right in here. Again, I went over this in great detail Thursday night. And you can go through that, and you can actually look at this through options and see that this was where the wall was. But nevertheless, so we come in and we had those calls, and I just showed you those calls, and we sold calls immediately, like right into it. And there were a couple of reasons why, but we sold calls right into it, and we didn't play games. I didn't get the high, no. I got right around the opening price of it. We paid 13 or 18. I got 50. I'm fine. I'm fine with it. And then we're watching it, and then we're watching it develop. Now, there's a couple things I'm going to show you here. I will put on speculative trades. The speculative trades that I put on, I mark speculative. These are alerts. This is the 15th. So when I'm putting these on the day before, okay, the day before, I'm not using a stop. I can't really go out there and tell people to not use a stop on a 14 or a $60 option. To me, it depends on the percentage of your account, whether or not you're willing to do that or not. It doesn't matter to me because of the percentages of certain accounts, but it's not realistic for people, right? So I always tell people, I won't lose more than 1% in something like this. Anyway, I had to put stops out there. So if you followed and listened to me this day at 11 o'clock, you lost money. Okay? This is really important for people to get. Not everything that I do, not everything that anybody does is going to always make money. It's just, it doesn't work that way. None of this works that way. You place your bets and they either work or they don't. And then you cover that bet and you move on to the next bet. This is that Tesla trade that you just saw. I just didn't feel like editing all this. February 16th. Okay, so here we are, 105. We're buying the 850s at 4. Speculative trade, there's no stop. Okay, this thing's moving $10, $15. You're in or you're out. Quantify your risk. Assume you want to do it or don't do it. Whether you're risking 400, 4,000, 40,000, I don't care, but quantify that risk. Ask yourself if you're willing to accept that risk. If not, you don't do the trade. It's that simple. And then as it's going down, we're trimming, right? And we're trimming into it, right? I'm showing you the whole thing here. Now I'm looking for 791. I don't get it, but we did quite well with the trade. Okay. This is the fun stuff. So here's the trade, and you're going to look at that and go, well, how in the world are you looking at that and saying you're going to do this trade? Oh, I'm glad you asked. Here's RSI. Okay. Now, whether you're doing this on a 1 minute or a 5 minute, I don't really care. But if you're doing this on a 1 minute or a 5, that's up to you. But people will always say, oh, RSI doesn't work. I would just argue that maybe it doesn't work for you, but that doesn't mean that it doesn't work, right? So here you see these peaks, and you would see this even more on the 5. And let's just drop that to the 5 right here. See it right there? Okay. And we're going to drop that right there, and we're going to pull this up. All right, got it? Good. See how this is here and this is here? How can the momentum of the stock or the magnitude of the move be greater if the stock's lower? Spoiler alert, it can't. When you see this kind of stuff, it is a negative divergence. You are setting up for a move, right? The other way to do it is you can just use the trend line and see that the trend line broke, and that's telling you that this trend line is going to break, okay? This is a leading indicator if it's used correctly. I don't care what anybody says, right? Scoreboard, period, all right? So here you are, and you can see the break. Now, on this break, all we're doing is this. We already have the levels marked off. I already know where my levels are, right? So I already have the chart out there for everybody, so they know where we're looking and where I think it can get to. So as it drops, they can pull out money or not pull out money. So what I'm doing while this is happening is we're already drawn out. We already have the levels. We already know what we're looking for. So as we're hitting them, people can pull money out. We're getting out while the getting is good. We're not cheering. We're pulling money out. Keep them in-house. I know people want to share. Please don't. Well, I mean, obviously now it's public. These are other trades, but I'm just looking at things, it's going NVIDIA, NVIDIA, NVIDIA. And then I'm just seeing the bear flag set up again, right? So I don't think we're done. I don't think we're done. And eventually, guess what happens? We get done. All right, fast forward. Anybody can do this. Anybody can do this trade, all right? What you have to do is you have to get comfortable with it. And you have to get comfortable with understanding how this works and understanding, quite frankly, when you start seeing these negative divergences, how you're going to take advantage of it. Now, this is where it got really interesting for me. Let me just clean all this off and show you this. So what do you see here at the end of the day? You have another negative divergence. You went into the weekend on another negative divergence, and you have people that are actually buying the stock after hours thinking that it's probably going to pop on Monday or Tuesday, right? And we'll see what happens. But this doesn't get any clearer that you have a negative divergence going into the close. I hope this was helpful. Please comment below if it is. I don't mind doing it and spending the time for this. I just want to know that you're getting it. And if you're not, tell me how I can make it clearer. There's a lot in today's video, a lot. And you might want to watch pieces again. People always tell me to break these down into smaller videos. I'd rather give it to you on Saturday and then go from there. Maybe I'll clip some out. You guys can comment on that or not. I want to talk about the S&P and what I'm suggesting by rolling or going sideways or underperforming the Russell. So 7% or 8% is Apple. And there's some things that we're starting to see here. Number one, you're on a major trend line right here. Okay, you are on a major trend line. You want to understand if the S&P is going to underperform or continue to underperform, watch Apple, right? It's 8%, okay? See these lines and see how the trajectory is getting lower and lower and lower? This is not good at all, right? This is a problem. You're unable to rally. You actually closed at the low of that bar, right? It's not great. If you drop this on a weekly, just to put it in perspective, there you are, right? It's not great. Here's your doji. The doji had to make a decision on the weekly. It did and said, we've had enough. You look at this close and you realize that's not a great close. It's actually one of the worst closes of 24, isn't it? Okay. It's really hard to find another close. Now this could be linked to the absolute boondoggle that is going to be this headset, which I think is going to be a disaster, but they'll try and say that it's not. But it's going to be a disaster. So it doesn't matter. I'm not going to spend any more time on it. Anyway, when you start to see this and then you overlay the simplest of indicators, right? And you start saying, okay, well, they're walking us down. We can't get over the 50. All right. Can't get over the 50. We can't get over the 50 on the RSI right here. The 55 is rolling down right here. You start looking and the 200's right there. So when you start to see this and it's all connected, you have to start becoming a little cautious on tech and the market itself. So maybe NVIDIA does mark a top, maybe it doesn't. The bottom line is none of us know, and I hope you really get that from this video. What you're trying to do is you're trying to look at all the pieces of the puzzle and make the most informed decision that you possibly can. But I would utilize this and I would utilize Apple as a bellwether and telling you which way. And they say no one's going to ring a bell, but if this cracks that long-term trend, ding, ding, that's it.